So the issue is, where do I put my long-term money? I need a savings account. So hence, this is where Bitcoin comes in. Bitcoin is the dominant crypto property network in the world. It's pretty much the only perfected digital property network the human race has created. It's a proven digital property. Everything else is a speculation that it may become property over time. Bitcoin is the success, and every like-kind competitor Bitcoin has collapsed against it, such that Bitcoin is the 95% dominant network in this space.
Cryptocurrencies have been close to the headlines since Russia invaded Ukraine, with Bitcoin in demand in Russia and beyond. Although, Bitcoin price has fallen once again below the $40,000 mark in what can be considered another flash crash. But still, investors see Bitcoin as digital gold, a handy place to store cash during war or disaster. As Bitcoin has a limited supply and runs on a global computer network beyond the reach of governments and is therefore safer than traditional currencies. But will Bitcoin remain to be the only dominant asset in the crypto space, or will it be replaced by another altcoin? Let's find out the answer in today's video. Hello and welcome to Money Talks. In today's video, Michael Saylor talks about the role of Bitcoin in El Salvador, the currency collapse, Bitcoin versus Ethereum debate, and the reason why he is so confident about Bitcoin. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Also, make sure to stick around till the end of this video, where I will share an update about Bitcoin and good news for the miners.
And there's two things that I really want badly. One thing I want badly is crypto dollars, like Tether or Circle or the like. It's basically US dollars sitting on crypto rails.
Like a stable coin?
Stable coin. And the world's bought 190 billion of that from like 5 billion over the past 24 months. It's exploding. It will go to 10 trillion if they could, right? The market has a trillion to $10 trillion demand for that stable coin. What'll happen when that happens? Every one of these local weak currencies collapses, right? There's not a single currency in Africa, in South America, in Asia you would rather hold than the dollar right now. The Chinese don't even want to hold the CNY. They would all convert to the US dollar. How do you know that? Because there are capital controls. Every country that implements a capital control, making it illegal to convert their currency or move their capital out of the country, is signaling to you that their currency is weak, and that includes the Chinese currency. So that's one dynamic. You got 130 currencies floating in the world. There's probably only 2 or 3 that'll be left when the dust settles. You got the euro, the CNY, the USD. Everything else either gets pegged to those or it collapses into those. And then the second thing the world wants is it wants crypto property. It wants money to give to your grandchildren. I want to hold my money for 100 years, if not 1,000 years. The dollar won't work. The dollar is losing 2% of its value a month, which is horrific, and horrific over 36 months. It's catastrophic over 10 years, and people are getting smart enough to realize that that won't work. The dollar is clearly the dominant currency, and it wants to be the dominant digital currency. It is really the dominant digital currency as well, despite the fact that the U.S. government doesn't have, U.S. banks issuing them yet, and we've been slow on the uptake. You can see where this is headed, and the driver is the stampede of everybody else in the world, right? You're a rich American and you feel comfortable with your banking structure. Okay, maybe you can ignore this, but name somebody in Africa, Asia, or South America that can ignore this issue right now.
Michael Saylor also talks about El Salvador and its Bitcoin endeavor. He explains how the currency in El Salvador had collapsed following civil war and why they moved toward digital banking.
The situation in El Salvador is instructive because El Salvador doesn't have their own currency. Mm-hmm. They had a civil war, and following the civil war, their currency collapsed, and so they dollarized. So the medium of exchange in El Salvador has been the dollar. And so their problem is and was that the banking system, the U.S. banking, or the traditional 20th century banking system is too expensive and cumbersome to serve the people of El Salvador. So if you think about digital banking, the future of the world is 8 billion people with mobile phones. I download an application in 60 seconds. And on that mobile phone, I carry a digital currency like the dollar, maybe the euro, maybe maybe the yen or the yuan, maybe if there's an effective nation state. And then I also carry a digital property, Bitcoin. I want to hold it for 100 years. It's instead of holding a building which you can tax or seize or rain on, or instead of like holding a bar of gold which you can take from me, I'm just going to hold my digital bar of gold on my phone. Mm-hmm. And then maybe I have some other assets. Maybe I have digital art. Maybe I have digital securities. Maybe copies of ownership of something else that I might like sitting in a wallet. But certainly, this I can give to everybody on Earth, and I can move the money at the speed of light. And what do I trust? I'm trusting a piece of software, which is a lot cheaper and a lot more reliable than trusting a building, a bank, a board of directors.
Michael Saylor shares his thoughts about his belief in Bitcoin and its technology. He explains that everything has some form of risk associated to it, but considering the monetary inflation, he considers Bitcoin as the best option available.
I think that everything in life has risk. So there's a black swan risk, an unknown, and anybody intellectually honest has to admit that there is that risk. That's not what I would say. What I would say is you've got a bucket of money. Let's come back to Africa. Okay. You've got $100,000 in Africa. You've got to invest it in something. You've got to put it into a building, into land, into an African currency, into something else. What are you going to do? There is 100% certainty that you're going to lose 80% of your money in most currencies over the next decade. There's 100% certainty you're going to lose 95% of your wealth over 30 years in just about every currency. And so you have to work through each of these issues and say, what's the cost of doing nothing? What's the cost of not taking a risk? What's the risk-free rate? Well, the risk-free rate is the monetary inflation rate. So the price that you pay to not do something is the rate at which the money is collapsing. If you were a Russian, they just lost 35% of their wealth by not doing anything in the matter of weeks. So in this particular case, you just have to look at the array of options. If you're an investor in South America or Asia or Africa, I would say the risk-free rate is much higher for you, right? Like you're in Lebanon, what are you going to do?
Saylor also explains what he thinks about Ethereum and whether it will ever reach Bitcoin's level or not. He elaborates that Bitcoin is the only proven digital property in the world. It is a property, not a security, beyond the control of any individual or corporation.
If there's a pre-mine and there was a group of individuals that initially control the thing, it makes it security. If anyone can exercise undue influence, it becomes a security. And technically, if you look at the definition, it's when you're making investment of money, relying upon the efforts of others and expectation of profit, it becomes an investment contract, a security. Okay. The fundamental difference between Bitcoin and Ethereum is Ethereum's monetary policy changes every 6 months. Every few months it changes. There's a difficulty bomb in Ethereum that's been getting pushed back since 2016. They keep pushing it back. When it goes off, it will obliterate a $50 billion Ethereum mining industry. Just wipe it out, completely change the protocol, flip everything to proof of stake. They keep putting it off. Okay. That sounds like a group of people exercising influence over the protocol. The thing you need to know about Bitcoin is on Pizza Day, May 22nd, 2010, Bitcoin was trading for a couple of pennies for the first time in 15 months or something like that. The protocol hadn't changed and has not changed. When it was a penny, the protocols were all the same. Today, they're the same exact protocol. There was a war fought over this, the block size war. And the block size war, all of the powerful holders and miners and exchanges wanted to change the protocol and double the block size. It would have changed all the economics of Bitcoin forever, for the next 1,000 years. It would have screwed up the economics of the miners. It would have shifted the balance of power in favor of some holders versus others. That war was lost. The original Bitcoin protocol continued on, and that means it's an unadulterated protocol, and it's shown itself to be resistant to the influence of any group of people. That's what makes it property.
A recent update in the space is that Bitcoin miners catch a break as mining difficulty drops for the first time in 3 months. Bitcoin miners got a small break in March 2022 after the network's mining difficulty shifted downward for the first time since November 28, 2021. Bitcoin's hash rate has remained high, ranging between 180 and 220 exahash per second over the last week, but the leading crypto asset's price has shed more than 3% during the last 24 hours. While it's not much of a change, it does make it 1.49% less difficult for a Bitcoin miner to find a BTC block subsidy, often referred to as a block reward. Prior to the downward shift, the network saw a total of 6 consecutive mining difficulty increases, which made it much harder for mining participants to find block rewards. So what are your thoughts about Bitcoin versus Ethereum debate? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.